In today's video, I'm going to break down ICT's trade taken yesterday, and I'm going to reveal to you Enigma and the Goldbach levels that he's using. Now, this is the, I think, sixth trade in a row that I'm breaking down his exact trade, but showing you the underlying Goldbach level that he's trading. Now, back in the day when I was a kid, there used to be a program called Magic Secrets Revealed. And it was basically someone in the Magician's Inner Circle, I think it was called. Yeah, there's a Magician's Inner Circle where the top magicians basically discuss their tricks, but they're sworn to an oath of never disclosing how it's done. But this guy made a pretty big name for himself by disclosing to the world exactly how these top tricks were done. And he was the masked magician. He always wore a mask, so he never revealed his identity. I feel like that right now. So without further ado, I'm going to break down ICT's trade today. Now, if you don't know what Goldbach is, you're going to think I'm crazy. Just have a look at my previous YouTube videos. Maybe have a look at my Goldbach introduction video or my Goldbach indicator explain video, and then you'll start to get an idea of what I'm talking about. But ultimately, the same way a magician has, different little hidden props such as wireframes that can be used to do their tricks, so things are floating in the air and as if by magic, but if you look carefully and know how to look, you can see the hidden wires that are actually doing the trick. This is exactly what the Goldbach levels are. Goldbach are the dealing ranges and the PDA arrays that are pre-calculated using mathematics and essentially are the wireframes of all of the pricing algorithms and what they should do. Okay, so let me break this down for you now. So this is the trade ICT took, and I'm going to open my trading view. So this is the date, the 6th of December. I've moved price back, so we have his price action here. Now, I'm going to load up the indicator for everyone who's new and doesn't know how to load up the indicator, because I get a ton of questions on how to do it. The indicator is called DMN's ICT AMD Goldbach. We remove AMD boxes. So I'm not going to explain this. This is in my previous video, but we're not going to talk about AMD today. I'm going to change my labels to white. I'm going to produce a stats box. This dealing range box I'm going to remove because I just need more screen space to show you what I'm doing. So I'm going to remove the dealing range box. Okay. So let me quickly explain Goldbach very, very quickly, because there's a lot of new people on my channel, and thank you for joining. So the way it works is every single dealing range is determined by mathematics. So if the spot price is here, it's already been predetermined that the dealing range low is here. The dealing range high is at this level. So these are exact prices, the high and the low. And the PDA arrays will form between these levels. So the rejection block will form here, order block will form here, fair value gap, liquidity void, breaker block, mitigation block, equilibrium, and then we reverse all the way back. So you have the bearish order block here, and you have the rejection block here. These are extensions. I have briefly spoke about extensions in a previous video. Now I'll show you. There's an example right here of how sensitive these lines are. This is the high of the dealing range, right? That's the price. 160.37 and 3/4, and it's off by half a quarter tick. Quarter tick is off by. Okay, that's how sensitive this is, right? Now, you have to know which power of 3 the algorithm is running on. And if you really want to deep dive into this, because it's only a certain amount I'm allowed to discuss publicly, I have a NDA with Hoppy, who is the founder of Goldbach. So there's only a certain amount I'm allowed to speak about publicly, but if you want to really understand Goldbach and use it effectively, there's a link to the official book in the description to this video. Now, a lot of people say, I need extra help. I have the book, but I need extra help. If you have a legit copy of the book, you then get access to the official Goldbach Discord. And the book and the Discord are supposed to be used in conjunction. And the great thing about the Discord is you have, so this is Hoppy's Discord. You have a section called questions, where you can ask all your questions and then Hoppy will reply, or I will reply, or someone else will reply. You have FAQs. You have the concepts broken down. You have the trading plans for Goldbach already there. So they're in the book. I think there's a couple here that aren't in the book. But you have the trading plans, so you have examples and you can ask about the trading plans. We go deep into algos 1 and 2. I'm there as part of my mentorship. We then break down all the assets. So if you have a trade that you put on or some questions, it's broken down by asset, indicators. There's a lot of crazy information there. How the silver bullet actually works with Goldbach. A lot of cool stuff. So if you're struggling with Goldbach because you got a bootleg copy of the book, you get a proper copy of the book, get access to the Discord and just learn this. People ask me, how should I look at Goldbach? Goldbach, if I was the inner circle trader, if I was ICT and I really wanted to teach people how to trade algorithmically, I would start off with first teaching the Goldbach levels, right? That would be, as Hoppy says, Goldbach and Hoppy's book, Demystifying ICT, is essentially month 0 of the mentorship. So I would first, if I were ICT, starting again 15 years ago, I would first say, look, all the dealing ranges are predefined by mathematics. This is the mathematics that produces them, and the full equations are in the book. So these are the dealing ranges, and these are the PD arrays that form within the dealing ranges. So that's a background on Goldbach. Now, let's break down our good friend ICT's trade. Now, I know, because I am deep in this, I know he was actually using not the 27 power of 3, which he used for the last maybe 4 or 5 trades that are broken down. He was using the 81, but he was also using the 81. Now, this is a super advanced concept, and even guys who are new to the Discord may not have a full handle of this yet. He was using 81 half shifted. Now, what does it mean to be half shifted? Okay, so whenever you produce an algorithm and you need to keep the algorithm secret, otherwise people can print money, you don't want the algorithm to be so simple that it can essentially, it forms the same price action again and again, so it can be easily deciphered. So there's a couple of things that they've done within the algorithm and the Goldbach dealing ranges to make price action look different. Okay, so like I said, the high and the low will form at a certain place for the dealing ranges for each power of 3. Now, there are only a certain number of power of 3s that you're really going to be using for intraday trading. So what they also do is they say, yes, you have the normal power of 3, but we can also shift that by 50%. And that will kind of should throw people off, and price action doesn't look as identical every single time. So I know our good friend ICT spotted that the algorithm was running on an 81 power of 3 half shifted. Okay, now we are a little bit more in tune with what he's seeing on his other screen. Now we're going to start getting into some concepts. The way ICT likes to trade and the way I like to trade is the more confluences you have in your trade, the more the higher probability it is. So he marked out this new day opening gap. This is the gap, but you want a couple of things to come together to build your trade narrative. So he was bullish for the day, I'm assuming. Now, I don't trade indices. I just trade Forex. I make a very nice living by just trading EU and GU. However, I like breaking down ICT's trades because he trades indices, and it just gives me something to do when I'm not trading. So it's NFP tomorrow, so I'm not trading today, and none of my group is trading today. So I thought I'd break down ICT's trade, and it just keeps my brain sharp, having a look at price action that I don't trade. So I don't trade the NASDAQ, but it's nice to see it. Here's your new week opening gap. This is the power of 3 dealing range for the 81 half shifted. Okay, so this is the low, this is the high. The rejection block will form here, order block, fair value gap, and so on. Now you have the background. Let's try to marry up with ICT's trade. And this is a special one for you guys today. I'm going to tape read, semi-live. I'm using ICT's price as the live price. Okay, so let's see if I can get this done. So bear with me if it gets a little bit complicated. I'll try to keep it as simple as I can, right? Because I know a lot of you guys are new to Goldbach, so I'll try to keep it simple. Okay, so I'm playing his trade. Let's do it at maybe double speed, because I think this is real time. Okay, so he's now bought at this level. So let's find his candle. So that's his candle, right? That's the candle that's playing now, and he's bought. So buy here. So now let's see where his stop is. There we go, 23.25. This is a market order. So an interesting point is it's hard to know the exact levels he's looking at. If he put in a limit order, then you can see the exact level he's looking at. Because he does a market order, you have this. There has to be a little bit of wiggle room because he'll see the level on Goldbach. By the time he executed, the price has moved a little bit. Okay, let's see where he puts his stop. There we go. Okay, so he's put it just underneath the low of the dealing range. What else does ICT say? The price is running through. Okay, he's put in another order at 15,925 and a half. 15,925. Oh, look at this. This is interesting, right? This is the second price that he's bought at 15,925 and a half. From a previous trade that I broke down for you guys, you know something about the prices he's executing at. 925 and a half. Now, what does ICT say about the type of trader you want to be? He says you can either be a fair value gap trader or an order block trader. Now, if you look at Hoppy's book, there are two main algorithms, algorithm 1 and algorithm 2. Algorithm 1 is really for order block traders. Algorithm 2 is for fair value gap traders. So he is now bought at 15,925 and a half. What level is that? That is the top, the exact top of the order block GB level. So order blocks will form here. His exact execution was 15,925 and a half. He wanted the last bit of the order block. Okay, now let's see what he says in his trade. So he's got a sell up there. We'll deal with that later. Yeah, okay, mate, it's live, fine. We all trade live trades. When I trade live, I have my MT5 on the left-hand side and my trading view on the right. So I'm showing you the actual execution and the profit moving. So fine, yeah, it's live. We get it, mate. Now, I'm not an expert on whether you can fake trading view, so I'm not saying it's live or not live. I'm just saying, cool, it's live. He's trading Goldbach, so you're going to trust the price. Okay, maybe my opening range gap is slightly wrong. His is quite wide. Oh, no, there you go. 1, 2, 3. Okay, we moved quite a few candles. No, actually, 1 minute time frame, 1 minute time frame. Okay, he's using a different gap, opening range gap. Not sure what an opening range gap is. I don't follow Okay, my bad. It was this thing. Yeah, we don't really have these in Forex. Okay, now we're more in sync with his chart. Apologies. I'm doing this for the first time after eyeballing his trade. Okay, what does he say now? He says, this is an order block. Really? That's an order block, Mr. ICT is saying. He's saying the order block is at 15.94 and a quarter. Okay. 15.94 and a quarter. So he's approximating it here. So I guess he's got a thick line. So I guess it's the top of this block. He's saying it's an order block. Now, yes, ICT, that's an order block. Why is it an order block? Because this down close candle is in the order block GB level. Yes, it is. Furthermore, now I don't want to get into the super low time frames because it can get a bit confusing if your eyes aren't accustomed to these things. Let me just put that up there. Where is the order block? He said 15.924 and a quarter. Yeah. See, if you look at the 30-second time frame, this is your nice order block. Okay. Where's the 1 minute? So you can use this body. See, it's funny how he used the body and he didn't use the wick. Why didn't he use the wick? Because he knows this body approximates the top of the order block GB level. And he doesn't necessarily want to say the order blocks is from 915, 925 and a half, because that will give stuff away. So he uses this as an approximation. So he keeps his magic hidden. There is your order block right here. That's one way to describe it. Yeah, that's your order block. On 30-second chart, there's your order block. In the order block GB level. Okay, let's flip back to the 1 minute just to keep it consistent with what ICT is showing you, but I'm sure he has lower time frame charts. So he says this is an order block, and I'm saying yes, it's an order block because it's in the order block GB level. Okay, order block. Let's keep it consistent with ICT's one though. There's the OB. I'm going to get rid of this new range opening gap because it might make the chart a little bit cluttered. That's right. So that's the first confluence. We know he came in because we went to the dealing range low, and that within that opening gap, he's bullish. So now we're at the bottom of the dealing range, which is the discount, the exact discount. He waited for price to move above the order block. So if you look at his advanced teachings in his, I think, 2016 mentorship, he says you don't have to wait for price to go above the candle and then displace and close and then come back down. As soon as it's gone above the order block, you can come in. Now, he just wanted price to go above the order block GB level. He waited for his retrace and he took some market orders. Okay, so that's why he came in here, because he got the order block. Now let's see what he says. Watch it rip higher now. Yes, because after you have an order block, you'll have the fair value gap and potentially the liquidity void. So then, yes, it's going to rip higher because this is an order block. Correct. Yes, this is an order block. We know it's an order block because it's in the order block GB level. Let's play this through. So that's his showing a gap. Okay, he's going to TP up there. Well, he wants to TP up there somewhere. Fine, I'll go up there when I get a chance. Okay, we're back on the lower time frame. Okay, breaker. He says this is a breaker on the 1 minute time frame. Oh, what do we have here? What level is this? So this is the breaker he's talking about. Now, that's your breaker. Where does this candle form? Let's use the body. This breaker, which ICT says is a breaker, forms in the breaker level. Does that make sense? So the order block that he spoke about is in the order block level. The breaker is in the breaker level as determined by Goldbach. Now, if you don't believe what I'm doing, go open the contract, December 2023, go to the 1 minute time frame, go to Friday, and open up the chart, and I'll show you again. So you know how to open the indicator. This is the setting you use, -1 plus half. That gives you a half shift. Use the 81. You can then do this for yourself, because people think I'm form fitting and making up these lines, and people are asking me, how do you draw the lines? Not drawing the lines. Mathematics will tell me where the lines are. You just have to know the power of 3. And if you're advanced, you may be aware of the concept of a half shift. I knew this was half shifted. Watch it rip higher. Okay, let's see if it rips higher. Pretty wild, huh? Okay. What's more wild? What is more wild? This trade or this explanation of the trade? Has he explained the trade to you, or have I explained the trade? What's wild? What's more wild? The fact that I'm telling you exactly which GB levels he's using, where the order block is, in the order block GB level, where the breaker is, why he came into the trade, the fact that his entry was exactly at the top of the GB level. Is this more wild than this? You let me know in the comments. Okay, what is he saying here? Prefer it to remain unfilled. Why does he think this gap will remain unfilled? Because, make sure it's this one, right? 15935. 15935 is around here. This will remain unfilled because it is from here to here is a liquidity void. A liquidity void is where prices are only offered one way. Hence, there's a void. Right? There's a void here. This is why we don't expect this to be filled until later. If this is filled, then you may have a reversal. So this is why he thinks this will be remain unfilled. So it's almost like he thinks he's a magician saying, oh, I know which ones are going to remain unfilled. I'm telling you it's going to remain unfilled. If we're in a buy program, it will remain unfilled for a certain amount of time because it's a liquidity void, not a fair value gap. Okay, I hope that makes sense. So he's saying it's a fair value gap. Yeah, that's not a fair value gap. That is just an imbalance, which can be filled because it's not liquidity void. The only true fair value gaps are the ones in the fair value gap GB level. There wasn't anything on the 1 minute. Hence, no real retracement. This is algo 1 because we had the order block. We mitigated some of the order block. We took off. If it was algo 2, then it would go rejection block, breaker block, fill a fair value gap, and then take off. Because it's algo 1, there is no real fair value gap. It's order block, mitigate the order block, a rip through. So there's algo 1 and algo 2, and they're also called, Hoppy calls them the trending model and the OTE model. So he's going to take partials on the way up. My algo should use these two. No. The Goldbach algorithm. Yes, I understand it's the Goldbach algorithm. I'm not sure if it's your algo ICT. ICT is a fantastic trader. Yes, he's an amazing trader. But it just annoys me that he's been teaching publicly for around 10 years and he just spoon feeds people like a new piece of information every year. And some things like Enigma, aka Goldbach, he doesn't want to share. If he had told us about this 10 years ago, do you know how many hundreds of thousands of human man hours we would have saved? If you just knew where the dealing ranges are, where the PD arrays are, what is algo 1, what is algo 2, what is a power of 3 stop run, what the extension's used for, how do you know you're going to move from one GB level to another, how do you know about when price is going to do some mirroring between dealing ranges. How do you know about unfulfilled ranges? The list goes on, right? If he had just told us, we would have cracked this nut and become consistently profitable much, much earlier. Do you know it took me a few months of being in Hoppy's group before I was consistently profitable? But I'd been studying ICT for like 3 or 4 years, and it was just an enigma to me. Okay, what do we have here? Risk and costs are covered, so he's just put his stop at break even pretty much, and he's taken some partial, so it's kind of risk free. Now we're in that breaker. Okay, now why did price stall here? Because we went from a discount past the equilibrium. We are now in a premium, right? If the algorithm wants more buys, it's going to go back down here, right? That's why it makes sense to take partials at EQ, because you are buying in a discount, and now this is your first opportunity to sell in a premium. So as soon as you get above EQ, you can start selling in a premium. And this was another concept where ICT will talk about discounts and premiums, but because you didn't know where the dealing range was, it's very difficult to know, am I in a discount? Am I in a premium? When do I come out? After EQ, you're now in a premium. You can take your partials if you want to. So we're now in the breaker, you see? In the breaker. First partial. Okay, so why did he take a partial in this area? Why didn't he just take it here? Because he knows we're now in a premium. You take partials in a premium. That's why he took a partial. You don't take partial in a discount. You buy in a discount. You sell in a premium. Okay, so he took it off here, which makes sense. So he's pairing liquidity now. So this is the first piece of liquidity in the premium. It's brought to random luck. No, it's not random luck. It is algorithm 1 based off of Goldbach. It's not random luck, and it's not ICT magic. This is Goldbach. And you too can learn this. It's not that hard. Price is retreating. It's dumping because we have paired our order. We have paired our discount buys at the first liquidity into a premium. So what did he do? I think he bought, so he sold again. Okay, now he's buying. So he still thinks we're going to get up there. What other liquidity is there to be paired? There's no more liquidity to pair. So this is the only, there's a little bit here, but this is the main liquidity in the premium. So it makes sense for price to dump here. So that's his buy. Oh, he's selling again. Okay, so he's getting out the trade. He's had enough. I think he made a loss on this, on something. Okay, he's buying again. Buying again. Oh, I think he sold that. I think he made a loss on that one. That's cool. Sometimes it happens, right? That's why I don't trade pre-NFP. I stopped trading after Wednesday's London Open kill zone. Okay, then it dumped. All right, cool. Okay, so recap on this trade. Why did ICT come into this trade? He knew the algorithm was running on an 81 power of 3 half shifted. I assume he was bullish. He had a gap. So you had two things coming together. You had the gap that needs to be filled potentially, and you have the bottom of the dealing range. So he knew he was anticipating a retracement, and that gap was at the bottom of the dealing range. So he's buying in a discount. He saw the order block was created in the order block GB level, as seen on the 30-second time frame. The order block. Once price had poked his head above the order block GB level, he waited for a retrace. He bought. His price was, his second buy was exactly at the same price as the top of the order block GB level. Price then ran away because it was algorithm 1. There was no fair value gap in the fair value gap GB level. Instead, we mitigated the order block, we ripped higher. We had the liquidity void in the liquidity void level. We don't expect this to be filled unless we have a reversal. Now, algo 1 normally rips quite high and it goes and it just shoots off. I wonder if he saw a market maker model. Oh, wow. Look at that. Look how we opened higher. So once you understand algos 1 and 2, you know how they fit into market maker models, the left-hand side of the curve and the right-hand side of the curve of the models. The algorithm, Goldbach algorithm, paired this liquidity, these buys here, with the first exit liquidity in a premium. Once it did that, price dumped. There we go. I hope this helps. I hope this helps to demystify ICT. And I hope it allows you to appreciate that our ICT is just a guy who has more information than you. Because he has more information and more knowledge based off of the Goldbach levels, because he knows the Goldbach levels and he has a lot of experience with trading them, he can do trades that look like magic. Because he knows the wireframe, see now price is here, these will be the dealing ranges. So we've fallen below the low, so this will be the high of the dealing range, this will be the low. Because he knows the wireframe on which all dealing ranges and where the PDAs will form, he can then do magic tricks using the wireframe that you cannot see. Okay, now I am teaching the golden bullet, allowing people to put on the same trades as me. So this is my private group, and you can only get access to my private group if once you've done the mentorship with me, then you receive an invite where you can join my monthly Discord server. So this was great because 3 of the guys who were trading that morning all took my golden bullet with me. Where's the TP? Who TP'd it? Yeah, there you go. Who's TP'd it? Yeah, so they all hit that golden bullet with me and TP'd. That's the beautiful thing. Once you teach this, it just makes sense. It's so much easier to trade. If you would like me to break down more of ICT's trades, or if you have any questions about Goldbach, feel free to leave a comment or a question below. Apologies if I take some time to get back to you. Sometimes the comments get a little bit uncontrollable, but I will try my best to get back to you. Or you can leave a comment on my Twitter, and I can find you there. So this is the trade actually that my group and I took together.
If you persist until you succeed at achieving a goal that is important to you.
So who's in this trade? 2 people were in this trade with me, then 3 of them.
Wrap up a sale or you make a career successful. You plug into your subconscious mind the success.
So this is how I prove that it's live execution. This is my MT5. This is my trading view.
Attempts to adjust your words, actions, and feelings to duplicate that success pattern. And that's why they say nothing succeeds like
There we go. TP'd. This is how I prove it's a live trade, because then I asked my team who TP'd, and by that point 2 people had TP'd. And then you'll see in my Discord, the last person read the comment and he had also TP'd. Anyway, hope you enjoyed that breakdown. I think this is trade number 6 in a row that I have broken down for you, proving that Goldbach is Enigma and ICT trades Goldbach. Once again, I request that you please follow Hoppy on Twitter. He's the guy who is the father of spreading the knowledge and uncovering Goldbach, not me. I'm just a guy on his group who happens to trade Goldbach, I guess you can say. But he's the guy. Please follow him. All respect to Hoppy for sharing his amazing work. If you would like me to produce some content on a specific topic, just let me know. I am more than happy to help. Hope you enjoyed the video.